$7 billion. $7 billion. That's like $1 from nearly every single human being on this planet. And that's how much money was raised with ICOs, or initial coin offerings, in just the first half of 2018. Now try to reconcile this number with the fact that over half of all ICOs fail, meaning each token is worth less than when it was originally purchased. Combined with a lot of regulatory hurdles, even being completely banned in some markets of the world, there are a few spaces that are so polarizing as ICOs right now in the startup world. Is it the next .com bubble, or is it the future of venture financing? And what has to happen for this to actually work as a source of capital for startups? Our guest moderator for this next panel is Tom Braegelmann, who's an international business lawyer at Bernstau, Brockdorf & Partners, with over 15 years of experience and registered to practice law in both Germany and the US. But if you're from the Berlin scene, you'll have run into him at nearly every blockchain meetup in town. He's made it his business to know what's on the bleeding edge of technologies that are changing the legal and financial spaces. And we are so glad to have him here today to moderate the panel. Tom, let's give him a big hand.
I go up and then to play the animation afterwards? Wait for the animation to play, right? Okay. Thank you very much. If my panelists could please come on stage. Thank you very much, Liz, for the introduction. And without much further ado, if I may introduce our very fabulous panelists. I'm sorry that we have no female panelists, so it's going to be an all-male panel. Sorry about this. We tried, but we promise to be better in that regard next time. So we have here Christian Szymanski from Stryking, who in a way did an ICO that I shouldn't say failed, but developed in a way that you expected, but not that you maybe preferred. If I could just briefly introduce. And then we have Thorsten Voss, capital markets lawyer, regulatory lawyer, who was with the German finance regulator BaFin for a couple of years, a very experienced lawyer who is advising in this field. And then we have Marc-Olivier Lücke from Atlantic Labs, who are investing in companies, especially I think Neufund, who are looking into this technology and investing capabilities that are now being built. And yeah, happy to be the moderator here. We have 35 minutes, we have a lot of ground to cover. Why don't we jump right into this? Christian, would you like to start in a way and tell us a way how your story developed? Why did you choose this way of investing?
So for us, an ICO was interesting from many different perspectives. At that time, we were thinking how to go on with the funding for our company, and we were thinking to go the traditional way or rather go the crypto way and do an ICO. And for us, this was very interesting because we already have a product that is community-driven, and ICOs are community-driven as well. So it was a very, very good fit for us because we have a football fan game that is live. And there are so many football fans out there, and also in the blockchain user base, there are a lot of football fans out there. So that was a very interesting way for us.
How much money did you expect to collect there? How much was it about?
Our hard cap was set at $20 million US.
20 million.
It was quite hard to set because the market was changing like every day.
Right.
So it took us a time to figure out what the numbers are. And in the end, we got delayed with our ICO and then ended up to start it in July. And that was exactly the months where the investment went down dramatically. And so we weren't able to hit our soft cap, which was set at $4 million US. And therefore, we canceled the ICO.
All right. We have here an interesting comparison how ICOs, in a way, compare to VC funding. Now let's go to Mark and say, is this one of the reasons why you're interested in this? Because this is disrupting your business model and just go with the flow and move on to the next thing, or?
No, and I think you have to separate two things in the blockchain space. One is we're interested in the technology, and there's long-term a lot of things happening there. And the other one is a very benign financing environment in the market, as you can see on this chart last year particularly. And I think part of it was driven also by a lot of the early adopters, crypto idealists making big gains in cryptocurrencies and reinvesting in their own space. So that's great. The ecosystem itself, financing itself to a degree, but also the large momentum in Bitcoin, Ethereum, and some other currencies, which are really driving both retail investors and speculative investors in the market. And we really had a bit of a bubble. Yeah, to tell the truth, last year a lot of things got funded which maybe shouldn't have gotten funded. We'll see about that later. But you know, whether the environment is very strong or not so strong, there's some fundamental technological disruptions happening there, and that's what makes it really interesting.
You mentioned the bubble. I have a question to Thorsten. Next slide here. This is apparently where the bubble popped. Are we lawyers at fault? Did we cause this? Did everybody just say, oh my God, this is legally so problematic, let's not do this? Or is there something else behind it? Is the law the problem here?
I think the law is not the problem, the law is the solution, and as everybody knows, once the lawyer enters the stage, the fun is over. But I'm also here to prove that Tom is also a lawyer, of course. When we are on the stage, the fun really starts. What we observe in our law firm is that the clients always struggle with the framework, and they ask us, should we go to Malta, Liechtenstein, or Switzerland, where the authority is always so easy and so easily to negotiate with. And what we now observe is quite of a market which is growing up, which becomes an adult market for adult investors. We have seen, of course, a hype and a lot of products for geeks and freaks, and we have seen even ICOs with coins which were useless, and they called themselves useless. I remember an ICO being called the useless Ethereum token.
There you go.
And they raised $40 million.
So it wasn't useless for certain people.
It wasn't for certain people, a speculation object.
Okay.
Well, but now what we see, there are some countries which we make it very easy, and now we have these people from the European Central Bank, and the guys, they digged into this, and they found out that 78% of the ICOs have been scams.
Oh.
And this is quite
in comparison
a scam
to the
market,
normal capital
right?
market, is this low or high?
High, absolutely high.
Okay.
Yes, absolutely high. And so what we need is the scams must disappear, and therefore we need a show framework, and this is what it's currently built in Germany and in Europe.
From my own experience, I remember in 2016, when this technology became more prevalent, that people who were building stuff at first said, oh, this is so easy, and we don't need any laws. It's all above the law. And then, of course, many things are easy if you don't have to invest in legal compliance or in lawyers. But even then, I think you have certain costs, Christian, as you could say, you have to market this, right?
Yeah, yes, of course. And for us, it would have been perfect if there would have been a regulatory framework in Germany, because it was quite hard for us to figure out what are we allowed to do, what do we have to do, and what can't we do. So for us, and in the beginning, we actually had this discussion, where will we do the ICO, from which country? We were discussing Malta, we were discussing Singapore, but in the end decided to go for Germany. But it was a quite hard and long way to figure out how we should do this.
Okay. We have here a slide about certain distinctions about what a token is, and I know people might have a question, what is this technology at all? I think certain things you just have to believe from us. If we say this is a relevant technology and tokens are a relevant way of investing, we're not getting into the details of blockchain technology and all that. Trust us on this, that this is relevant. There is always a distinction between security tokens and utility tokens. If each of you can maybe say a little bit about this, whether this is actually relevant anymore or not. Mark, you want to? Mark, I would like to tie this then into this slide for you. But if each of you could briefly address this, because this is in a way a big debating point still. Sure. Do these two exist?
So I mean, we had payment tokens, like Bitcoin initially. Then we had a range of utility tokens, Ethereum or other ones building on Ethereum, where really the value proposition for an investor like myself or retail token investors was driven by the belief that there's some utility to buying services on a platform later or using the platform, and that when the platform grows, the value would also rise of the token. And now we're in a new phase where we're thinking a lot about, can't we take real financial assets, be it equity or real estate or other ones, and put tokens against those. where you believe then is not so much in the utility of a network anymore, but in the value of the underlying asset. That's, for me, the main differentiation.
If I could briefly interject, I remember in 2015, 2016, the discussions, people were trying to sell tokens, and I sometimes asked them, well, what are they for? Are they giving you access to a service? Are they giving tied to an asset? And I was, in a way, dissed as being very traditional, right? As what kind of question is this? You can trade this token, but I think it's fair to say it has to represent something, either access to a service or an asset, and that's where the law ties in. If you could briefly add something, and then you too, and then we move on to the next slide, maybe.
Absolutely. Well, and even important to know that according to the European Central Bank, utility tokens are currently not covered by financial regulation, currently not.
Okay.
This makes it so attractive because you don't have to publish a prospectus and so on. And then we have the security tokens, which are tradable once they're listed, and then they are covered also by market abuse regulation and the MiFID regulation and all the prospectus works. And this, of course, makes it even more difficult for the guys initiating an ISO to fulfill these requirements. But these are the requirements which build trust by investors.
Christian, were you building a utility token or a security token? Which were you trying to sell?
We had built a utility token.
All right.
As our game platform is live, it was quite easy to understand what the utility of the token is, because everyone could see it in the platform how it should be used. And the idea was that we completely wanted to decentralize our platform and make it user-driven, so that the users will be rewarded for putting content into our platform, for developing features for our platform, and so on.
Oh, as a reward system. You do something as a user, and then you get token return that you can use then? Or?
Exactly. So and on the other side, there are certain features which we would have required you to have the token, so that there's a whole reward and spending loop in the game. So, but to be honest, the problem was, as mentioned before, that the security token, that there is no regulation for that there at the moment. If it would have been there, that would have been something that we really would have considered to do. But it was simply, from a legal perspective, not possible from Germany. And that's why we went for the utility way.
All right. Mark, if you could, in a way, with the next slide, in a way, tell everybody, why is this even relevant? I mean, there's money out there, people are happy to invest, you are a VC, there's no traditional money around. Why do we need new ways of investing or having utility tokens? Why is this? Is this just happening because it is happening, or is there any benefit to this? Maybe you could walk us through this a little bit.
I do believe there's a strong benefit, even if now there's a little correction in the market, but may also be healthy. In terms of security tokens, that now there's a lot of talk about now, and some platforms for issuance of tokens arising as well. The main idea is that you take an illiquid large asset, and now you can divide it into very little pieces, tokens, and you can make it tradable, easily transferable. And that's a huge benefit. And in the equity markets, we already have that a little bit with IPOs, or stocks on stock exchanges are tradable and divisible, though not maybe in such an easy way, so it can be done easier. In other asset classes, such as real estate or commodities or other ones you look at, the benefit is even much bigger because there's no easy way to trade.
I have a short example for this. Imagine Radialsystem was tokenized and you could buy 1,000th of Radialsystem. Usually if you were in the German land register as a 1,000th owner of the Radialsystem, nobody would buy that. Right? But if this was tokenized, you could sell it on a certain stock exchange. And while we're sitting here, Radialsystem could change its ownership 50 times. Maybe that's scary, but that's in a way what the technology would allow, right? If the law follows. But please go ahead.
So, for an ex-capital markets banker, that's very attractive. I think, okay, you can really make all these assets liquid and tradable, and that's already a great proposition. But and which is different than the utility tokens we look at, and there you can also apply more or less existing financial market regulation to these financial instruments. You just have to see how exactly you do it. But then there's all these other benefits to token issuance, where the security utility tokens, which makes it really interesting. And that is because with token you can do a lot of things with them. Particularly you can program them. You can embed a smart code, which then has certain rules. For example, when do you pay out a dividend? Maybe when there's a certain market indicator going to a certain point, or how do you exercise voting rights in a company? And you can link these tokens to external databases or to other programs, other software. And I think this is where the long-term vision is of VCs and why some of the very sophisticated West Coast investors are also investing in this space, because they're seeing, as the world is moving towards a world, driven by software. And I think there's some other talks about this today, where in 10 years, software and machine learning will automatically run a lot of those industries and services that we have today. But in order to run this, you still need central ledgers, central databases that initiate programs. And the blockchain can be a very important part of that puzzle, triggering these other part of the software. And that goes beyond a specific security token issuance or a company application. It's part of a bigger message there, which makes it so interesting.
Christian, this sounds also great. Was this so easy to implement? I mean, don't you need new specialists for this? I remember when the blockchain technology became, in a way, much more hyped in late 2015, 2016. My friends from the Berlin blockchain scene always said, let's get rid of the middleman. And I always said, well, you're just trying to be the new middleman here. And did you have to deal with new or as a more gender-neutral intermediaries? I mean, how reliant on programmers do you have to be? Are there even enough available to do this? This has to work in a way that it's not failing.
So for us, the initial idea was that the token will be usable in our platform. The question is how far do you go down the road of decentralizing everything and making everything with smart contracts? And we didn't want to make everything decentralized. So our idea was, and I think a lot of products do that at the moment, that you somehow digitalize the token in your platform and only can transfer it in and out with the wallet. Because and sometimes it makes the things really complex. You have to pay gas costs for executing the smart contracts, so there are costs involved in this, which the user would have to pay. And that is why we had some kind of model which was in between. It was not completely built on the blockchain, but the blockchain was connected to it.
So you are building on Ethereum, but you try to stay out of it for cost reasons, partly.
Correct. So the initial idea was that the users are able to transfer our token into the platform and then use it from there with the platform technology we already have.
And
yes, go ahead.
If I can jump in here, I think in terms of the scalability and where we are in the system, we all have to realize we are very early on in the development of technology. We think we have automated systems which are hyper scalable and efficient and quick. In reality, they are not yet, so we have a long way to go.
If you're all interested, go to ethereum.org/agreement. There you will see allegedly the agreement that you conclude with the Ethereum Foundation in Switzerland if you interact with this. And it's a very nice agreement, but it spells out how critical or how fragile that infrastructure still is. It's only fair that they announced this, so you should be careful also when you build something on this. But I don't know if Amazon could have existed in 1993 with the way the internet and email existed there. People expect this to scale up and then work better. If I could move on to the next slide, I think we still have 15 minutes. To non-lawyers, this looks probably scary. I'm not so scared by this. Thorsten, if you could walk us a little bit through this and then still, in a way, plausibly argue that law is not the problem here.
Well, it's a courtesy of Phil Fisher, and the non-lawyers always tell me, well, it's courtesy of Stephen King, obviously. And when I talk to the colleagues in Silicon Valley, in our office there, they tell me the German lawyer's brain is very hard, and the regulatory lawyer's brain is even harder. But if people say there's no regulation, there is a regulation. Well, what is on the slide are all the capital markets law which exist in Germany. The German Banking Act, the Funds Act derived from the European AIFM directive, the securities regulation, and of course market abuse issues. So, and the good news is here. It works quite like a roadmap. Well, you can walk through the system, which is not a real jungle. It's really an if-then system. Yeah. And one, of course, has to understand it, and then he has to go into talks with the German regulator. And really good news I have here for you is that BaFin has written a really big guideline, ICO and TAO, Tokenized Asset Offering Guideline, and the one to push Germany as a cool place for tokenization.
Has it been published already?
It has not been published yet. They always tell you only a few days, but it's ready, it's written, and the most of you must have read there has been a spectacular decision by a court in Berlin, the Kammergericht.
If you want to go into that.
From a criminal court, which said Bitcoin is not a currency unit. BaFin is of another opinion, and many guys say, well, now that the Berlin court has made this decision, how spectacular, anybody can start and go on. Well, one must bear in mind, this is a single decision by a single court, and any other criminal court in Germany may be of another view. It's not the federal court, it's not the BGH. And this is not criminal law, this is regulatory law. Put the currency unit topic aside, you always have to face this.
So, what I would like to take away from this is there's not a big stop sign here. That would be the real problem. If you would say, okay, we can't do this in Germany. I think at some other countries, I think South Korea is totally outlawing any cryptocurrency trading, and it has a very hard stance. This actually means it is legal, and as far as I understand, BaFin, the German finance regulator, actually wants people to experiment with this. They just want to protect those people they have to protect by law, and that's fair enough. I remember in 2016 when the famous DAO, the Decentralized Autonomous Organization, came up, in a way the biggest ICO ever almost. People said, well, whoever invests there doesn't need to be protected as a consumer. They know what they're doing, and then it failed spectacularly. That cannot happen. The German finance regulator has to protect consumers, and if consumers invest here, were you marketing to consumers, Christian? I mean, or just experienced investors? I mean, were you selling to everyone for a few pennies?
Yes, of course. Of course. So we had a longer private sale phase before the public sale phase. In the private sale phase, we were addressing bigger investors and VCs, and but in the public sale phase, it was open to everyone.
So you had to deal with this maze. Was it very difficult? What were the highest costs, the marketing costs or the legal fees?
The legal fees, they were a big chunk, to be honest. So, if not the biggest, yes. Because, you know, it would have been great if the BaFin paper would have been out at that time, but it wasn't. So we had to figure it out ourselves. There were 1 or 2 ICOs before ours, but not many. So it was quite hard to figure it out.
I think in comparison to the rest of the world, Germany is not looking so bad. Would all of you agree? Right? I mean, in my experience, it's still early on. I know people from Switzerland who say, come to Switzerland, everything is allowed here, to which I always say, how do you know? Is there any court decision out there? No. Even the Swiss finance regulator is not actually putting its limb out and saying this is all legal. So that's, I think, partly clever marketing from the Swiss. But let's not go to the details here. But my impression is that Germany is in comparison, not a bad jurisdiction for this. Would all of you agree with this? And who of you is of the opinion that you can pick your regulatory law by just incorporating in the Caribbean or in Gibraltar or Malta? Is this something that is still being done? I know people, a lot of people who do this are in Berlin. And then they think, well, let's create a company in Switzerland or in Gibraltar or wherever, and let's shirk German regulatory law. Have you experienced this? And each of you, could you say that this is really a smart way to do it?
Yes, we have experienced this, but I don't think it's a smart way, because there's the German corporate law and the international private law, and very often we only do have the act of incorporation in Switzerland or wherever, but the decisions, in fact, are taken in Germany, and then we have court rulings from the Federal High Court in Germany, which says, well, in fact, this is a German entity, and all the board members there are liable, personally, and only a few people know about these effects.
Mark, is Atlantic Labs, are you focusing on companies to do this as German corporations? I mean, you probably be open to entities from other jurisdictions as well, but you haven't given up on doing this from Germany, right?
Yeah, but I think there's a bigger point, and it's, you know, what you're saying, the market is still very young, and we're creating a market where we want to build trust and make, you know, also allow retail investors to return and feel comfortable investing. And there's a lot of things, like we say here on the slide, which have not been well established, and that's, you know, regulatory certainty in different jurisdictions, that's technical certainty that you don't get hacked and the code works, it's that there's some basic governance in the companies that you're funding, some basic investor protections. All these things have not been proven yet. So I strongly feel, while everybody wants to do a security token offering now, that's great, but we need to establish a mature market which has some rules, some standardization, some guidelines, and already if the companies are incorporated in Germany, I think that's already one big step to feel more comfortable than if it's incorporated in the Caribbean. And beyond that, I think that, you know, the tokens themselves should be standardized. Not everybody doing their own code that you don't understand. But I really think having issuance platforms, such as Neufund in Europe, where we invested in, or Polymath, or some other ones in North America, which make the issuance process really easy for corporates, and on the other hand, give some confidence to investors that they know what mechanism they're investing in, that is the way to go.
And remember, Berlin is one of the hotbeds for this because the current token standard for ICOs was defined by Vitalik Buterin and Fabian Vogelsteller. Vitalik is not in Berlin, but Fabian Vogelsteller is in Berlin. And a lot of brain power is used here, which might still help companies here. But maybe if you two could also add to Mark what he said, how this could develop.
Yeah, so actually we had this discussion. We were discussing for us Singapore as a basis for our ICO. Firstly, because our lead investor is based there. Then the Asian market is much stronger than the European market for blockchain-related topics. But then on the other hand, we had this legal uncertainty, and what Thorsten said was exactly said to us as well. So we are reliable for it when the company is in Germany. And then we turned it around and used it actively, saying we are doing an ICO from Germany as a sign of trust, because people trust Germany as a big business country. So yeah, we just used that and decided to go for Germany.
All right, Thorsten, could you add to this?
Yes, I've also clients in the audience which are smiling now because they're going the same way. They're doing it from Germany, and they're filing a securities prospectus with BaFin and say, we want to build the trust, we under the German regulators' supervision, and we don't go to other countries. We want to be made in Germany. And we even see clients as a selling argument. We've seen on a slide before in China. Of course, many Chinese investors would like to do crypto business and business investments, which is difficult to do in China at all. But they are fond of alternative investment funds where the asset management and portfolio management is domiciled in Germany. And so that's why we've advised on quite a few investment funds doing cryptocurrency and Bitcoin mining farm investments, and these were because the Chinese investors demanded these capital markets products.
All right. I think time is running out. We have 4 more minutes. I know we asked you to send questions. I'm not sure we're going to be able to answer any questions, but we're here in the audience afterwards if you want to ask questions. Wait, I didn't want to do that. Did you? There you go. Mark, I think this is your slide. If we briefly can go on the outlook, is this going to be relevant, or are we in 10 years looking stupid? Like, you know, does anybody remember Second Life and the Linden dollar and all of this? You might remember. Even legal dissertations had been written about that, and now I think it still exists, but it's not relevant. I have a feeling that's not going to be here the case, but our feeling is this is going to be relevant in one form or other. I mean, we don't know where we are in comparison to when the internet became well known. Is it 1994? Are we still in 1973? But maybe if each of you could 1 minute, for 1 minute, say something on this, and then we'll wrap it up.
I strongly believe that the majority of financial market assets may move to become security tokens long term. Yeah, and we have these huge asset classes, real estate, commodities, but even bigger credit. Yeah, that's $100 trillion market that may become tokenized over time. So it's very relevant. For that to happen, though, the ecosystem has to become more mature. We need standardization, we need exchanges, and we need this whole ecosystem of service providers around it, analysts, rating agencies, market makers, in order for it to become really mainstream.
Thank you. Thorsten.
Well, we will see in the next few months and years a rise of security tokens, which will become very, very important, and they will in particular become important for the tokenization of illiquid assets, such as real estates, and we currently advise also quite a lot on media financing, where the people say, well, we want to be independent from all the other sources, and we want to do our own thing, and all these assets which are not tradable, transferable by nature, there the blockchain builds the bridge between the capital markets and makes it tradable there, and this is really truly fascinating and really disrupting, and there are big chances for every players in there. The ones who set up the business models, the investors, and of course the legal guys, the middlemen.
All right, there you go. Thank you very much. Christian, are you going to try this again in the future? I know I think you did a different round of financing now. Let's not go to this, but you're not ruling this out again in the future, right?
No, absolutely not. We are looking at this right now, and we will stay in the blockchain because we see all the advantages the blockchain has and the crypto funding against the traditional funding. It will get bigger, and in the end it will be the way to raise capital for many, many companies. And so I strongly believe that we are only at the beginning, and it will get much bigger.
All right, that's a positive outlook. I think that about wraps it up. We're running out of time here. Thank you, everyone, for being here. Thanks for listening to us. I'm sorry that we didn't get to answer any questions, unless we have some extra time, or we don't, right? Right? We don't really, right? We do? Okay. Anybody has a question in the audience? Because I don't see the questions. Oh, yeah. Okay, these are the questions. How about the first one? How to figure out whether the ICO I want to invest in is a scam or not? Each one, in one sentence, can each of you answer this? How do you find it out?
Well, my friends in Neufunds actually saw a problem too, and they came up with you can go to ICOmonitor.io, and they checked the code on some of them.
Right. I would say trust the programmers you know, because I sometimes know they look at this and they say that's a fishy code, or they say I know these programmers there, but that's of course very special knowledge. Thorsten, how would you do that?
I will look into the ICO and will try to understand the business model, and sometimes there's no business model at all.
Okay. Christian?
I just agree. It's business, the business model, it's the team behind it, and you have many rating sites out there who do check the ICOs, so I think nowadays it's quite easy to find out if it's a scam or not.
Next question, is the crypto market crashing or not? I think, of course, many cryptocurrencies are currently going down, but we're not really talking about cryptocurrencies, rather about tokens that are representing legally or technologically a certain asset. Can we really talk about a crash there? If we leave out the scams, is this really crashing, or is it just developing? Each of you, maybe in one sentence.
So in my eyes, it's not crashing, it's just a transition phase, going away from the ICO, going to the STO, what you mentioned. So the regulation changes, the circumstances are changing, but it's not crashing.
Okay.
Yes, it's not crashing, it's a market growing up, and with the new ICO guidance from the regulator, we will see the rise of the security token, and well, within a few months, a token which is really interesting, not for retail, but for institutional investors, because then there is a stable framework.
Okay, do we have time for one more question? Yeah? Yeah, okay. Last question. If blockchain is immature still, is VC investment over the next 12 months focused on blockchain enterprise solutions or big ideas protocols? What interests you? Maybe Mark, if you go first, and then both of you just chip in. Yeah. What are you building right now? Infrastructure, Neufund, I think, is in a way almost a tokenization infrastructure. And is this it?
Yes, so I think there's two things in there. One is, you alluded in the beginning, is VC being disrupted by the market, and I think what you're saying just now, actually we see VCs playing an important role and actually being the pre-investors in nearly all successful ICOs now. So first you want to get institutional investors on board before you go public. And the other part of it, which business model are you doing? I think we are a long way out on many things. Infrastructure needs to be built, so I think that's actually still probably more interesting over the next years until we see really successful dApps. But at the same time, there's a lot of focus on actually security token market and issuance platforms and service providers around there. And I think that is a space which is relevant straight away.
Okay. Maybe the last question. It's interesting. When will we see security tokens and real estate happening in Germany? I would say if the real estate transfer tax is sorted out. Because if this is taxable, that's probably then just as interesting or uninteresting as before, and then the speed is not really relevant there. Anything you would like to say to that, Thorsten?
Well, we see first at years of the tokenization of real estate assets, but well, Tom is absolutely right and correct. Taxation of tokens is also a really relevant issue. Okay. Unfortunately, we don't have the time to discuss.
All right. Okay. I think that's it about. And thank you very much. And thanks again. Give a hand to the panelists, please. All right. Dankeschön.